Hello everyone and welcome to Day Trader S&P 500. This is Dale Woodson, editor of Woodson Wave Report, one of Timer Digest's top-ranked stock market timers. Today is March 14, 2021. Happy Pi Day to everyone. Want to remind you, been around since 1997 with WoodsonWave.com. We've got our annual subscription for a Fibonacci 233 a year. Monthly subscription for a Fibonacci 144 a month. Put out daily reports, sometimes like Friday more than once a day. Friday we had a midday report and a post-market close report. Before we forget, I want to thank everyone for supporting the channel and remind everyone to hit that subscribe button. Don't forget to hit the reminder bell and the like button. We appreciate your patronage to the channel. We have a lot to cover today. We're going to get into, let's get to it here. We're going to get into the S&P, Tesla and gold as usual, GameStop, Bitcoin, interest rates. I think that's about it. But without further ado, let's get into it. Here's our daily chart. You can see going back to the March lows. Let's count it out for you guys. A little quick review here. Let me get to my impulse waves here. We have a 1 up, a 2 down, a 3 up, a flat 4, and we're looking for a 5. Our long-standing target of 39.96. That might be off by a little bit. Okay, so far so good. We're not quite there. We may have stopped a little short. We'll get into that with a little shorter term analysis. We like to go from the previous fourth wave and analyze up when we're in an uptrend. When we're in a downtrend, we'll do it from the wave 2 high, looking for the wave 3 low. Okay, so from the October 30th low, here is the October 30th low. Now we're looking at an hourly chart. We can do this for you guys here too. Bear with me. Our wave count here, we have a 1 up, a 2 down, 3 up, 4 down, and a 5 complete or maybe not. Okay, for you bears out there, we're looking for validation of the bearish count, which took a severe blow last week, but we need a break of 36.46. We need a break of the wave 1 high, which occurred on 11/9. As you know, last week we thought that wave 3 was here. It petered out, and this was 5, but this new high last week negated that count. Okay, we had several, I think it was 2 or 3 different counts that were valid, and the move up to new highs invalidated some counts. Okay, so right here is where 3 equals 1. That is 3. This looks like 4. 4 held below the wave 1 high. Again, we need a break of that high. We don't have one. Let's look at the Fibonacci retracement, if you will. And I don't think I got it. Yeah, I did. Okay. So this might not be exactly on the penny, but we'll get close enough. You can see that that retracement was a 50% retracement. So we have a move up here from the March 4 low. And you can see well, let's go look at it. I think I have it here on, on a 5-minute chart. I believe that's the March low. There you go. We have a 1 up here, a 2 down here. Here's where it gets tricky. We could count 3 here, where 3 equals 1.618, and then a 4, and then a 5. Or 3 could have extended to a 2.618, trying to pull a Tesla, doing 2 and 3.618 multiples for third waves. But let's figure it out here. Let's do a retracement here. So we have a 1, 2, and then a 1, 2, 3, 4, 5 for 3. That could be very possible. Let me count those internal waves here from that second wave low. A 1, a 2. Boy, it's going to be tight on 3. Okay, let me change the degree on that. I'm doing this cold, believe it or not. Let's make that much smaller. Let's make it a sub-micro. There we go. And let's do this one here. Let's see how this works out. Let me get a 1, 2, 3, 4, 5 going on there. Let's call that a 1, a 2. We'll change that. That would be a 3, and a 4, and a 5 there. So we'll have to make that a higher degree. Let's get up to micro. There we go. Okay, so we had almost 100% pullback there. Let's look at this second wave here to see how it retraces. And that one is right about a 382. Let's look at this third wave. Let me pull this up here and move this to the beginning of the third wave. There we go. What does that look like? Like nothing. It's not even a 382 over there, okay? And in this fifth wave, we can tell without looking. Well, let's look at it and see what we got here for that last fifth wave. That was a more deep retracement of 618, okay? That's a possible count with the third wave extending. This could be a 4 developing with an ABC. Let's look at that for a retracement level, extension of, that's A down, that's B up, and C down would come right here. That would be better, much better. Looking at 38.99, is it? Right under 3,900, okay? If this market's going to march up to our 39.96 long-standing target, it's likely to pull down A, B, C to here. Previous fourth wave of one lesser degree. I like that. Okay, so if the market didn't top here, and that's just 3 of 5, we'll look for a 4 pullback here, and then a 5. Let me move this, and let's go ahead and do a little extrapolating out. Okay, so let's just say that is correct. Let's get a fifth wave extension that'll gain equality with wave 1 if 4 pulls back to here. Okay, did I put that in there right? Let's just move this one and call it even. There's where 4 ends, and 5 puts us at 39.84. And you know we have a long-standing 39.96 target. Let me get into, I wanted to show you this other one here where I'm counting for the 1030 low, and with that wave 4 low there, we get one above 4,000. That's possible, okay? Let me look at what else we had for you guys here. That was it right there. We don't want to get into that yet. There we go, 39.60. We already hit that one. Let's see what we have here. There's that 41.36 again. Yeah, let's get into the Fibonacci time spiral, the one from the September high. As you know, it counted alternating highs and lows, and then lately it caught 3 consecutive highs in a row. Okay, the last one being the weekend of February 13th, which Monday was a holiday, so it topped the very next day on Tuesday. It's as close as it could get because the market was closed on Saturday, Sunday, and Monday. The next turn date in the sequence is April 23rd. If this is going to continue, it'll mark another high. We'll have to see how that goes. It's possible it could mark a low, okay? I'm still looking for this thing to go up to 39.96. And that being said, there's not a lot of room to the upside for this thing, okay? We're already sitting at 39.43. So what we put out to our subscribers was our positions for rating services. That's independent rating services that rate the newsletter for timing. It doesn't make a whole lot of sense to get long for the last, 50 points. Okay, so we're remaining short on our positions for timing services with our newsletter. I want to get a little review on that with you guys. Let me pull up the Dow. Well, first of all, let's go backwards a little bit with that. You guys may be familiar with this time spiral I've shown you before, where I started one on August 24th, which for years and still to this date, I call that the orthodox top, not the actual high in January, because the market spun on all these Fibonacci time spirals off of that high on 8/24, not January the 14th. Much like the current one that is spinning off of the September 2nd, 2020 high. Okay, so this called almost every high for about 7 years. little bit more than 7 years, and after that it didn't work anymore. So going back, I'm talking about being out a little bit early instead of a lot late. So let's look at the Dow. Here is that August 24, 1999 high. Okay, you can see it right here. There it is. Okay, and it wasn't the actual high, but as I said, the market, we were doing the Dow back then. I do the S&P almost exclusively now because not many people trade the Dow, but you can see the market made a higher high. Okay, so how much higher did it go? Okay, let's measure from that high to there. And it went up 3.45%. Okay, so that's the kind of, we got short then. And if you went short with us, you may have got out here, but you may have missed this 3% rise. Okay, compare that to where did almost everyone get out? Well, everyone buys at the top and they sell at the lows. That's how you get a low. So if we go from here, well, I got to do this differently. I got to stretch this out. Okay, so what happened after that high? Let's get it out here, and you can see, let's expand this out a little bit and make it this way. There we go. And as you can see, you may know the market bottomed in 01. So what was the decline from where, if you get out early, then you miss that little bitty 3% rise, but you miss this decline. Where does most people get out? At the bottom. We're looking at 19.8% there. We had a lot more in the NASDAQ and the S&P, and actually from high to low it was more like, let me get the actual high to low here again in the Dow. That was a pretty significant decline of 22%. Actually, it was more than that because I'm not very accurate. But anyway, you get the picture, okay? Is it better, to get this rise or miss out on this rise and get, excuse me, this decline? Okay, so anyway, that reminds me of, and we can kind of slide into interest rates here, okay? And you guys may recall I showed this last week where the 30-year Treasury yield from the March lows had more than a 200% rise in a year. For Treasuries, for interest rates, that is huge. It doesn't happen, okay? It did, but it's very, very rare. It's a huge move in a short period of time for interest rates. Interest rates had a 40-year bull market in prices and bear market in yield or interest. Okay, let me jump into that here. Here I have, I didn't want that one. My apologies. Let's get into, maybe I don't have that up, okay? But here's who started it all. Japan in 1989. Here's Japan's high. This is a monthly log chart of the Nikkei 225. And it hit a high in 1989. They started suppressing interest rates to save the market. And what did it do? Here's today. They've had 89 to now. It's 10 years. They called it the lost decade in the year 2000. It was the lost decade. The market went nowhere. Okay, but it wasn't a lost decade. It's now been 3 decades, and they still haven't got back to where they were in 1989. So why do we think it'll work here? Do you think interest rates will go below zero? I don't know. It's possible. I would be surprised if they did. Here is the 30-year Treasury bond yield. Okay, I couldn't get anything to go back. I remember the 70s and 80s when interest rates were in the teens, and you can see here, this one here is 15. And this is your bull market in prices, but bear market in yields. This is the interest rate. Okay, it goes from 15%. You can see the March low here. I think that 40-year bull market in prices and bear market in interest rates ended last March. And let's take a look at this decline. And unless it goes negative, it would be more than 100%. But this decline here is, oh, just about 95%. Okay, you can see the shoot up here. So I believe rates bottomed in March, and they'll go up, and they matter. People who are old enough remember when there used to be a 60% stock, 40% bond mix for your portfolio. Now everybody thinks markets go up forever. And as we know from 2000, 2002, and 2007 to 2009, they don't. Actual top, hard to say, but I'd rather be out, a couple weeks or a couple months early, like we talked about with 1999, than to be out here and losing 30, 60, 80% of your portfolio. So the top is near. 39.96 would be ideal. If you ask me, I say hit 39.96 because it is Fibonacci perfection. Okay, let's see. We talked about interest rates. I want to get into Tesla. And I had a question or two. It's like, do you have a bull account for Tesla? And I always want to look at an alternate count. And you can see here we're looking at a daily bar, and this goes back to the lows in 2019. You can see a wave 1 up, a 2 down, a 3 up. This is obviously a 4 sideways triangle. And then we've got a 1, 2, 3, 4, 5. And then within here you can see a 1, 2, 3. There's another triangle within there. So these multiples are huge. Let me show you guys the extensions. And this won't be exactly, because I'd have to take my time in here to get it exactly right. But I'll get as close as I can. You can see with this wave count, wave 3 did more than a 2.618 multiple of 1, okay? You get a 1, you get a 1.618, you can get a 2, a 3, and a 4, but that's a pretty good size move. But not to be outdone, what does wave 5 do but make almost a 3.618 multiple of 1? Okay, so you know, it surprised everyone, and it didn't get over 900. I had a 1,000 something target, but I guess if you would want to say a bullish count, I could, I don't want to say manufacture one, but you could say that the third wave even expanded more than just this, that it would be 1, 2, and then 1, 2, 3, 4. The key here is this high here. This high at 500, okay, back in September. If this is broken, and it almost has been, then the chances of a bull market from above here in the near future are as close to 0 as possible, because this thing breaks down perfectly in 5 waves. So we could say that this was, well, I'll just put it out there for you guys, okay? That would be a bullish count, which I don't give it much of a chance. I'll put that above there. That would be 1, that would be 2, that would be 3, 4, and 5. And let's make that a higher degree to be technically correct. We'll make it intermediate. There you go. So there's 1 and 2, and then 3 subdivides 1, 2, 3. Then we get a 4. But again, there's your make or break, okay? Right there. That September high of 502. 502. Okay, once that's broken, then we're looking at my targets that were down in the 3s for this move down. Let me move to that. Let me put that in red. I'm gonna leave it there for future reference, just in case. Okay, there we go. There we go. There we go. Okay, so let's break this down from the high, from that wave 5 high. You can see we've got a 1 down, a 2 up, a 3 down, a 4 up, and a 5 down. And we have what looks like a 3-wave correction to the upside. This went from 900 to under 600 from the high in January to the low in early March. So it's roughly 6 weeks, and it lost 30% or 300 points, roughly. Well, let's just see what it was. Let's look at that again. Let's do that from here to there, is 40%. How about that? And 363 points. All right, that's a huge decline. But the thing is this looks like 1 or A, 2 or B, and 3 or C is to follow. Let's look at the retracement here on Tesla. Okay, from the high, I'll get as close as I can to that 900. That's close. Here we go. And there is the A, B, C, and it's a perfect 50% retracement. Okay, it could still go up to 762, but that's perfect. That looks good. Let's look at C as compared to A as far as extensions go, and we'll get this down here. We'll get up to the A high, down to the B low, and you can see there's where C equals A at 640. It went past that. There's where C is a 1.618 of A, and it went spiked above it, and now it's right on it. So that's perfect in two different ways. One on the retracement up of this decline, and one on the multiple, Fibonacci multiple, on the way up, right at the 50% retracement. So let's get rid of that, remove that, and we'll look at our next wave down. Here we go. From the 900 high, 1 or A down, 2 or B up, 3 or C down, target 357. If it wants to do a 1.618, we're looking at 134. Is that out of range? No, we saw on the way up it made 2.618, 3.618 multiples. So that's what we're looking at with Tesla. Okay, that make or break back there, I believe it was at 500, is critical, which is right here. I think that was 502. Yeah. Okay, so once that's taken out, then we're on our way to 357. Gold. What's going on with gold? Nothing's different with gold. We said even though it made a high that this move down looks corrective. It does not look impulsive. That means the main trend is still up, and this is a corrective wave. We've got an A down and a B up. C equals A here at 1644. Not quite there yet. It could gain a 1.618 at 1448. So that's what we're looking at. Nothing's changed. Just a quick little update on the wave count. We'll see when it hits here if that's a good enough retracement where it'll go resume its uptrend and challenge the all-time highs. But until then, near term, we're looking for a further decline. GameStop, the fun one, huh? And looks like here again, this is a little bit of review, but we had a huge move up here, and I've got the wave 5 at the after hours. It was higher than 480, which was during hours. It was I think it was 520 or 502. Maybe I'm mistaken that with Tesla's price. But here you can see a 1 up, a 2 down, a 3 up, a 4 down. Yes, 4 did overlap 1, but where was our target? 1, 2, 3. That was 3. Let's see if 4 could gain equality with 1. It should be at that 3 high because it's about the same price. We could look for 424 to 574. I'm sorry. Yeah, 421. Okay. Again, I reiterate, I've never seen a more volatile stock. I wouldn't trade it. I wouldn't short it. I wouldn't trade it long. I wouldn't advise anyone to do it, but it's fun to look at because it's getting a lot of attention. And back here in January when they halted buying of it but not selling, they forced it down, just like they force interest rates down and force people to buy stocks. They changed the rules, forbid buying GameStop, and made it go down. But again, like I say, humans don't have a choice. They react and act in Fibonacci multiples and Elliott waves because they're human, so they can't help themselves. Let's go to Bitcoin, and I left this up here from last time, and as you can see, we've made a new high. Okay, so this obviously is wrong. Okay, so what is right? Let's see here. I'll do a little cold analysis, and I believe this starts, let me just get a reference point here. Yeah, here we are back at the March lows. Let's just do this here. Let's get an extension on Bitcoin, see if 5 is in or if it should go higher. This is going to be a huge multiple like Tesla. Yeah, 3 did a 6. I'm sorry, Wave 3 did a 3.618 multiple. See, these are possible in third, and they work both ways. You can get a 3.618 on the way up and on the way down because third waves are the most powerful. Let's see what we can get for 5. And we move the start point. Whoops, my apologies, guys. Let's see if I can get that back down there. There we go, and that's pretty darn close. Yeah, that's why we had a 5 target there. Okay, we got past it. So 5 is going past 1-to-1 relationship with 1. The next one is the 1.618 at 74,291. My apologies, 74,291. Let's look at this a little closer. This is a 4-hour bar, by the way. I think I can do that with this here. Let me knock those guys out of the way, give us more room. Okay, here we go. Let's see what, let's leave that up there. Let's do a Fibonacci extension here from the wave 4 low. We get a 1, we get a 2 here. Yeah, 3 is a 1.618 there. And that slipped on me. 4 here, right there. We're going, wow. Okay, that's right near the 1.618. So that can't be 5 there. That can't be 5 there. This obviously looks more like 3. Let's see what that is again. Let's get down here to the 2. That 3 is a 2.618. Yeah, that's 3. We're doing a little live adjustment to our wave count here. I left that up there from last time. The wave 4 low stays above the wave 1 high, so that's technically correct. So our 5 of 5 target here takes us up to either 67,475 or that 70 whatever it was number. Let me open this up a little bit better here. Okay, that was right around, I'll get it, either 73,609 or 74,291. Okay, looks like Bitcoin has further to go to the upside with the break of this high. We talked about the interest rates, and we talked about the Nikkei. That's amazing that they tried this QE and it didn't work. We talked about the Dow. Let's look at crude oil. Here we go. Again, everything from the March lows, a 1 up, a 2 down, 3 looks like it's subdividing. We got a 1, 2, 3, 4, and this 4 only did a 236, but it broke to new highs. Okay, so we're looking at 1, 2, 3. Let's get rid of this here. Remove that. Retracement. 1, 2, 3, 4. Let's see where 5 equals 1. Bang. That's pretty much similar to Bitcoin. We get a price range here of 77.96, 79.57. This looks like 1 of 5, 2 of 5, and here we go, 3, 4, 5. So look for oil to go up. WTI, I believe it is. Yeah, there it is. WTI, that's a daily chart. Okay. So that should do it for today. Let's see if the market can make it to 39.96. Look for reversal to the downside. And, oh, yeah, let's get retracement targets because the S&P should correct this 5-wave advance. We'll put it right there. So we're getting a little ahead of ourselves, but correction should be Fibonacci targets of 3310, 3097, 2883. And here's the previous 4th wave of 1 lesser degree, so that would be nice right in there near the 382 retracement. Okay, thank you guys again, and until next time, take care, everyone.